following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning on this Thursday, the 25th of February. Tomorrow we're going to have Samuel Archibald Arrington Hicks Crawford as our guest from Art Crawford Perspectives. I had dinner with Arch last night. He was in rare form, as he always is, and so he'll be on tomorrow at 9:30. And I'm going to have an extremely special guest very soon, someone that sold 300 million copies of a book. And anybody that guesses the name of that person wins a nice little prize. But I don't think you're going to get who it is, so I am going to tell you. My good friend, no, Larry Williams never sold 300 million books. My good friend Byron Tucker has some friends from college, of course, before I met him, and one of those folks is Victor Mark Hansen of Chicken Soup for the Soul. And I know Mark, and he's just moved back to Scottsdale, Arizona, where Byron has a home. And I'm pretty sure he's going to come on because, well, he's just a really nice guy. What he gets for speaking fees is just, it's almost like what Hillary gets. But he's a really nice guy, very, very funny, and just super fellow. Anyway, Byron has been the best man at his wedding, so they've been pretty tight ever since Byron went to school back east, and so did Mark. He's moving from California, where he said there's just too many restrictions on him as far as watering his lawn, and so he's moving to Scottsdale in the desert. Go figure that one. Okay, we're going to talk here a little bit. We'll start out with the gold market because I think this is the one that could really be the big surprise. I'm not sure if it's going to be a surprise. Maybe it'll be a surprise to me and no one else. But as you can see, this triangle that we posted in here earlier in the week, we were talking about it on the show several times, and we mentioned that if we got above that 1228 level, there was a strong probability that this triangle would be broken to the upside. And we certainly did do that. What I would like to do is to show you what's happened after that, because that's what I think is the most important thing of anything that we're looking at. Now, this is the action that we had yesterday. As you notice, when we broke out above the triangle that we just posted at that 1228 level, you see when it broke that trend line, that green line right there, you'll notice how the market, after we hit the 786 yesterday, that came in at 1250. We had a high of 1253.80. Then we dropped $34, which is the harmonic number in gold. And so it's going to be interesting. It's almost the same drop that we had between the 18th and the 22nd. And we returned right to that trend line. If you'll notice that, it was pretty much spot on, touching that trend line, which is basically like a 20-minute line. So gold is still in a bullish phase as long as it can stay above this 1222 line, 1222 per ounce. However, if we get below that, then you're looking at something that could be more sinister. This could be the first big Gartley in a bear market, and that would take us down to the very larger ABCD that's hanging around $1,165 per ounce. So we want to watch that very, very closely. So that's one of the things that we need to cover today. Now, I also would like to cover, what's happening in the stock market. Let's do the crude oil market first, because I think that's the one that is also very interesting. And when we were on the air yesterday, we had a really nice buy in the crude oil. We had a beautiful Gartley pattern coming in there at 30.69. We then rallied 6% up to the 32.40 level, and we are in a downtrend. As you can see, those little cycle highs have been very, very symmetrical. And this last one that we had was a 50% and a 61% retracement of those previous highs. So we have lower tops. So there's not not any question that this market's still in a downtrend without any argument at all. However, if we were to draw a trend line down from the 22nd through the 24th and look at a triangle, much like we did with the gold, if we were to break out above that 33 level in the crude oil, and we're trading at 31 and change now, so it's not going to be an easy task, that would tell us that we're most probably getting ready to go up to the 37 level, which I think is a reasonable target. I mean, we stop and think of this thing when we got down to 28. This is April crude, by the way, folks, because I move out one contract from the lead contract, so I don't have to switch as often. They're very, very heavily traded, so it doesn't make any difference which one you're looking at. But I happen to be April. When I go from April, I will skip May and go into June. That way, it keeps me from switching them back and forth. So this is what we're watching in the crude right now. If we get below that 30.80 level again, that tells us we're going down to the $30 level, because that's going to be the 786 retracement. So it's still, the cat's not out of the bag. There should be some pretty good support around 31 and a quarter. That's what I'm looking at per barrel in the April crude, is what I would be suggesting we would be looking at. Now, we've got another one that's coming up. Now, this is not ready, but we've got it on our watch list along with soybeans, wheat, and corn, and we'll have something on soybeans just a little bit later in the show. But I wanted to bring out one of our old-time favorites that we've been able to catch a few times, and that is this natural gas. This is going back for the last 5 months, and you can see we've got a three drive to a bottom pattern forming here. We're very close to the old lows. We're trading around 17.5 cubics, and so I believe we're going to get down to around 15.6. We've been there before, so it's not a mysterious prediction at all. So we will have a three drive to a bottom pattern at that point, so we'll keep an eye on it very, very closely. Now, we've had a few failed Gartleys in this pattern here during January and February, where the market would only rally 2 or 3 days and then make new lows, and that happens all the time, because these patterns are far from being perfect. We already know that. If we try to be in the neighborhood of 65 to 70%, you're going to do extremely well. Think if you were in Las Vegas and you were able to play blackjack, and every hand you were given an ace and the dealer was given a 5. That's a tremendous advantage. However, if you get a 3 as your whole card and the dealer has a 6, the odds have completely changed. That's the difference between gambling and speculation. In speculation, you can take your bet off the table and not even have to risk anything at all. Whereas in gambling, once the event starts, you're trapped into that. Plus, there's a fee or an edge that the house uses to pay all those bills for those big buildings and lovely machines. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the euro here. As you can see, we've been in this rising channel line where we've had higher tops and higher bottoms. We've had some nice cycle work. I didn't put it in here because it would be a little bit too cluttered, but you can see the cycle lows are coming in at either 618 or 786 on a regular basis. We made a 61% retracement as we touched this trend line yesterday, and now we're starting to move higher, very, very slightly, of course. But should we break that line to the downside, that would be below 109. 40 in the euro. That would suggest we're going much, much lower. But until that happens, it has a bias to the upside. Channel lines are formed by these patterns as they complete the ABCD patterns on the expansions and the ABCD patterns on the extensions to the downside. That's how these channels are formed. And what's so interesting is they're relatively predictable. This is what Dr. Andrew Lowe talked about in his book, The Non-Random Walk Down Wall Street. So that's what we're really looking at when we're watching this. Now we're going to switch over and talk about everyone's favorite, the stop and P. Give me a second and get the chart up. Yesterday we had we did make that 382 retracement down there at the 1890 level. The low was 1888, and then we had a very strong rally up into that 50. Well, we actually rallied, I believe, 50 handles. No, we rallied 40 handles. 40, no, it was 50 handles. We rallied 50 points all the way up into the 1938 level, and so far that's been the high from last night. We've had a little bit of what we call profit taking, I guess, 10 points or so in the middle of the morning, but it really did not amount to very much at all. If we look at that on a shorter term basis here, you'll see again last night all we were able to do would be to make a 38% retracement of the last move. In other words, we got up to that 1938 level, and then we backed off to 1919. And that was a 38% retracement of the low from 1890. So this is when markets are hitting 38% retracements, folks, be real careful selling them because you get into this thing could really take off. Now, should we break below the 1920 level, then all bets are off, because if you were to look at this and we don't get above the 1938 today, we will be looking at a head and shoulders pattern that is formed from the 17th of February into the 22nd and then out into the 24th, yesterday's, and that would be a perfectly symmetrical head and shoulders pattern, and that would have bearish implications. And remember, we've been rallying since this big low that we had back at 1804 on January the 11th, so we are 5 weeks into this rally. And whether this is going to be the market that's going to push it higher or not, I don't know. I thought it acted incredibly well yesterday, given the fact that it could only make that 382 retracement, given the fact that the market was extremely bearish. And then again last night, when China was down 6.5%, all we were able to do in the S&P 500 was to make a 38% retracement down at 1919. So the 1919 is a pretty good spot to watch what's going to happen with that market, because long term, folks, these markets are just they're incredibly bearish. I'm hoping, and hoping is a terrible word for trading. Hope and pray. You can do the pray part, but the hoping, that's not very good. You got to be able to use your common sense and don't hope and act. You've got to act and not hope, because hope is not going to get you out of any trouble. I can promise you that. It's much better to be out of a market wishing you were in than in a market wishing you were out. So we do have some critical things coming in here today in the market. We need this thing to get above 1947. Then we'll have a breakout, and that ABCD structure that we had between 1804 and 1947, 140 points. If you add that to the 1880 that we made yesterday, that's going to take us up to potentially 2030 in the S&P, and that would be a retracement back of a little more than 61% from the high we made at 2134. Should we get a move like that, that would be duplicating what we had in 1929 before we had the move down. The move down was not the crash, folks. In 1929, the market went from 363 in September into November. That 6-week period, it dropped from 363 down to about 256, I believe, in the Dow Jones, and then it rallied 60% over the next several months. The next 3 months, it rallied 60%, and then after that top was in, it gave back 90% of its value, where the Dow bottomed on July the 5th. I believe the bottom was at 41 or 42 in the Dow Jones, and that was the bottom, and that was the start of the Great Depression. Stocks actually started to rally into the Great Depression all the way through until World War II, and the market was closed a short period of time during that time, and then after that the baby boom started, and bada bing, bada boom, away we went to 18,000. So we'll watch that very, very closely. No, I was not a teenager in 1929. My father was. He was born. My father was born in 1913. So my father was a teenager then, but I certainly weren't. But we heard all the stories of the Depression, my sister and I. Fortunately, we lived in southern Indiana, where we had plenty of food and we had clothes, and my grandmother ran a restaurant, so we were never without food or anything. We didn't have any money, but we certainly were not unhappy. We didn't know there was anything else, but we had a pretty good thing. No, my father was he was a structural iron worker, And before that, he was a bartender at my grandmother's restaurant. But he did spend most of his life as a structural iron worker, and that's about it. He didn't have, boy, he was smart though. Boy, gosh, my dad never went past the 4th grade, but he could speak 4 languages and he could do calculus, geometry. Gosh, he was really smart. And crossword puzzles, there wasn't a crossword puzzle he couldn't do in a matter of minutes. And unfortunately, I didn't get absorbed with any of that gray matter. I had to dig it out myself. So that's a big difference with some of these things that we're watching. Okay, we want to get on to the next chart that we're going to look at here. And that is one that's coming up in the currency market that looks really interesting. And that is the Canadian dollar. And that's related to the crude oil. This is a half-hour chart going back over the past 3.5 weeks. And I want to put this up to let you folks look at it, because we're getting down to an area where we really got to pay close attention. Now, the market, I put this in last night, a few hours ago, and we've come down quite a bit more. We've gone below that 1.27 now at that 136 level, and that sets up several ABCDs patterns coming in at this 135 and change. And that could be the thing that makes the crude oil finally turn. So who knows? 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and this is Larry Pesavento for TFNN, reporting from the offices of Duke and Duke in 100 South Broad Street, Philadelphia, Pennsylvania. We're going to switch our mode of operation here to the grain markets just slightly. I wanted to bring a chart of the soybeans up because we want to keep an eye on this. We've got a chance here, folks, for a massive three drive to a bottom pattern and several ABCDs occurring down at the 825 level. Now, if you'll stretch your imaginations just a little bit, go over to the period between February and May of last year, and you'll see that same type of pattern that formed at the 925 level. So we're talking about $1 a bushel cheaper than what we were looking at. And of course, we were able to be in that move, and it rallied all the way up, rallied $1.50 a bushel, which is 7,500 US dollars in that trade. Fortunately, it stopped exactly at the 786, which was giving us a spot to also take profits. We did not get short that one until later on, when our good friend Mr. Z had reminding us that we had rallied back to that $10 level after the big breakdown, and then of course we continued down another $1 a barrel. But we got a chance here in soybeans, and the operative word here is chance, because these are all probability based. They're nothing in etched in stone, of course, but this is going to be down into the future, much like that natural gas contract looks like. It's just something that could happen in the future. We want to be prepared for it because, chance favors the prepared mind, and that's what we're trying to do here. Now, yesterday was interesting because we had a situation, we were talking about it on the air, about how treasury bonds and gold and the stocks, everything were lining up at certain numbers. And as you can see here on the treasury notes, and the treasury bond chart looks exactly like this one. This is the hourly chart for the treasury notes. We completed the ABCD pattern expansion to the upside up in that area of 131.20. The high was 131.25, and of course it broke a full handle, which was the equivalent of two full points in the bonds. Now, it stopped almost exactly at the 61% retracement, and it's doing the same thing that what the gold did. It went back and retouched that trend line that it broke out of. So as long as we can stay above that 130.29 level in the treasury notes, these still have a chance to rally some more. But the overall bearishness of this pattern, you have to pay attention to it, because this is what Gartley really talked about on pages 221 and 222 in his book, Profits in the Stock Market, from 1937. He said you want to be able to sell that first ABCD correction in a new bear market, and that's what we've just had here yesterday in treasury notes and treasury bonds. And that would mean that risk would be off, and so stocks would rally and bonds would sell off, if that is the theory of the day. And that can change quite a bit in these markets, so you certainly don't want to get tied up in them if they don't work the right way. That's why when these patterns fail, folks, they're telling you as much as they do when they actually don't work. So you've got to be very, very careful about that. I've had a request to talk a little bit about the silver market, and I'll put the chart for silver up, but you can see silver is the weak sister of the group, and platinum is also, but silver is certainly lagging badly. And even though it did stop at the 61% retracement, it hasn't had any type of a rally as yet, as we have had in the gold market. So that's pretty much what we're looking at in the silver. It would have to get above 15.80 per ounce, another 50 cents higher from where we are right now, and then we would have a pretty good idea of what we're looking at. Because we're opening today, stocks are continuing to gain a little bit. The bonds are just down, just around, looked about unchanged on the day, and the gold is sold off. If we get below that 1222 level in the gold, that's going to tell us that we're most probably heading down towards the 1165 level. That's what I would be assuming. Now, if you remember yesterday, and if you didn't, I'm going to remind you, and that is we looked at this chart that Larry Edelson had sent us about the neural net forecast for the gold market, and frankly, it's acting pretty much like what you would look at. The question someone's just asked me, switching subject matter again, is crude oil, and I think crude has a chance if it can hold that 3,100 level. It's got a chance to do it, but it's just a chance. It's just like anything else. The markets don't always give you what you want, but if we could hold 31.25, that's down about 80 points in the crude oil, it certainly has a chance of moving. The second question that someone's asked me is, where would I short the S&P? And you're asking somebody that thinks it's going higher, so I would have a difficult time. Now, if we get above 1939, say 1940, 43, somewhere, and then the market doesn't go running away from that level, that would be a place where you'd want to be doing it. But you can't be selling it if the market gets extremely strong. In other words, we start seeing this 150, 250 point moves up. Standing in front of those freight trains or trying to catch a falling knife is not the thing to do. It's like trying to catch a safe coming out of a building. Wait till the safe hits the concrete and breaks open, and then walk up and take the money out of it, because you certainly don't want to stand in front of it. I've had experience doing that, and it's not nearly as much fun as it appears. It's better to wait and see if the thing is going to turn or not. But right now, the overall bullishness of the market still looks pretty good. Long term, I'm incredibly bearish. What I'm hoping, well, there's that hoping word again. What I'd like to see is I would like to see the market rally. We've got Friday coming in tomorrow, and so what I would be expecting is to see the market rally possibly 2 more weeks. If we could rally into March 7th or 8th, that would be the ideal situation from a timing standpoint, because we have the astrology things telling us that we have a new moon, and we're going to have an eclipse, a solar eclipse. So all of that would tell us that that would be the best timing place to sell us. And if we have the ABCD structure from what we've done so far, that would take us up to 2030. And stop and think, folks. We've gone from 1804 to 1938. So, well, we actually went to 1942, and if you add that, the 382 retracement of that takes you to 2030, and the old high was 2134. That would be an ideal situation to go short. Now, whether we're going to get that or not, I'm not sure. My assumption is that we're not going to get that, and the reason for that is the fact that the market is just so overall weak. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I've posted into Tiger TV the chart of gold looking over the last several days. And as you can see, as we were on the air, we had just backed off from 12.42 all the way down to 12.25. Again, that's $17, which is 1/2 of the harmonic in gold, which is 34. That was exactly at a 78% retracement, and we've already rallied $10 an ounce. Stop and think, folks. For us to get a $30 move, 30 handle move in the S&P, 30 times, the 50 gives you a $1,500 profit potential out of that. And we don't see a 30-point move very often. We did yesterday, of course, but we don't see that too often. But look at gold. I mean, just from today, we went from 12.42 down to 12.31 up to 12.39, and then down to 12.27. So, I mean, it's really moving. I mean, you talk about volatility. That's the one where you want to be trading because you have more chances of winning. Now, you also have chances of losing. So what you've got to be able to do is to match the patterns with the ratios if you're a pattern recognition trader, and then, just let the chips fall where they may. And that's what trading is all about. We never know what's going to happen next. We never know how much money we're going to make on a trade. All we can do is protect ourselves on what's going to happen on the downside, and that's the real key, to be watching these markets. That's what it looks like, from my opinion. And now, with the little luck that I've had here today, I haven't made a trade yet today, is we have lost data, so I don't know what's going on in the markets. I'll have to wait until the break, till we're finished with the show, to find out, what's going on, and we'll go from that level and see what happens. But right now, it's just not holding up the way that I wanted to. I'm showing the last price at 1932 in the S&P, but I don't know whether that is even right or not. So I'm stuck in a little bit of a little thing here, of a little quagmire of prices. So we're not going to be worried about it. It has nothing to do. Very good. I'll say the last price is 1926.75. So we've actually broken now, and we're testing that 61% retracement off of 1919. So Maybe we're not going to get any higher. I don't know. But that 382 level at 1919 is very important, because if we break that, we're probably going to be heading for a down day today. And with bonds strengthening up a little bit, that's certainly a possibility. One of the questions from one of our listeners is about the British pound. It's in the lose all the time, much like crude oil is, about them leaving the Eurozone. They've even got a name for it. I think it's called Brexit or something like that. Sounds like a cookie more than a economic action, but we'll see what's going to happen. We've mentioned several times from our friend Jim Bartolione at V50 Partners that we have some price objectives at 135 in the British pound, and we're trading at 139. And believe me, we've gone down 400 pips in a matter of a few days here, ever since the mayor of London said they wanted to Brexit is what they call it. Yeah, I thought it was something like a bagel, but who knows. Anyway, the mayor of London was for London being autonomous again and getting out of the Eurozone. And I don't know how that's going to work. I mean, how do you get 23 countries to agree on anything? And you've got one country, Germany, that basically controls the whole darn thing. So it's going to be interesting. And Germany's going to have the problem because the Deutsche Bank, their biggest bank, is in deep trouble. The stock has gone from 54 to 15, I believe, and it's still headed lower, based on the big ABCD patterns going back on the weekly chart. So that's a problem that they're going to have to deal with. The German DAX was trading up early today, but we'll see how it's going to hold up in here. Anyway, 1919 is the key level to look at. If that breaks, watch for a counter trend ABCD rally. That would probably get you in the market on the short side without risking very much at all. And also keep an eye on the bond market, because the bond market was the key yesterday, because we had hit that 786 retracement, and then we made the ABCD up on the upside, and then the market rolled over. So watch the bonds. As they said in the movie with Dustin Hoffman and Robert Redford, All the President's Men, I think it was, about Watergate. And it was follow the money, because that's really what you want to be keeping an eye on, is to watch what's happening with that. So we will have Arch Crawford on tomorrow at 9:30 in the morning. And then, as I mentioned, we're going to have Victor Mark Hansen from Chicken Soup for the Soul. He sold over 300 million books in about 15 different languages. And he's a very pleasant fellow and very humble, and certainly had a great deal of success in writing, which is always very good. Okay. I want to finish up the show. We got a break here coming in just a second, but I do want to mention that overall, and I've said this several times, the overall market has such a bearish overtone that it's just really difficult to think that this market's going to make new highs. I guess it's possible, but boy, just looking at the technical picture of it, when you look at the banking index and you look at the IWM, how little it's rallied, the small caps, and this is supposed to be the time of the year where the small caps are shining, and it certainly isn't. And also the NASDAQ is lagging badly. We got stocks like, Amazon that have been hit quite a bit, but they're still high priced. And Facebook is, the same thing. So someone's asked me to comment about the legal situation with Apple. Folks, I got about as much interest as I do with the election stuff, because it's all probably preordained what they're going to do anyway. But I understand. I don't like the government looking over my shoulder, and if they're going to go into our telephones and look at us, we're in deep trouble. So you can't let them do that. That's basically the bottom line. When these smart people come out, like the owners of Google and the owner Tim Cook and some of these other guys, I know they have an interest in protecting it, but they're trying to protect us too. And I think that we have to. And I don't think the Supreme Court will allow it. That's my guess, because that's the ultimate intrusion. Because then they have total access to anything you might say, on the telephone, and that's not good. That's what they did with the wire services for breaking the the organized crime things for gambling, and then they finally legalized it in Las Vegas. So we'll ever see. Listen, yes, I have testified in court as a pattern recognition expert. I've done that several times. Yeah, one time in federal court in Los Angeles, and it was a very interesting experience. And I had a total of 32 expert witness cases over the time that I did that during 1985 through 1987. And I lost one case. I didn't lose it. The attorneys lost it. We lost the case together. But that was the one case that I thought for sure we were going to win, but we did lose that. Most of them were based on brokers acting improperly and firms acting improperly also. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I have a question from someone in the den. The problem is I'm having technical difficulties as far as getting data coming in, and so I'm not able to bring it up. But the question was, how did Jim Bartleone come up with that 135 price pattern? I will post that in tomorrow because I'm unable to do it right now. and I will bring it. But basically, what he was looking at from the 1985 low, and that's when we had the Plaza Accord from the Plaza Hotel in New York, when these dudes met about foreign exchange, and that sent the dollar into the toilet. And we had some, monster swings since then, and we've now gone below the lows of 2009 in the British pound, and the next level that he was looking at, which is a major move, takes the British pound down to the 135 level. So that's about 400 pips from where we're trading right now. We're at 139.30, and so that would tell us that's most probably where we're going, because we have broken some major support. This morning we had a little 80 pip rally, which was pretty much nothing, and then the market's given most of that back again. So we'll see if that's the case. I'd like to remind the folks to keep an eye on 1919 in the S&P, because that's going to be a critical spot for support. It might touch it and then hold, but if we get sharply below that, somewhere 1915, something like that, then that tells us we've got a bias to the downside. So we want to watch it very, very closely. The pound responds well to the eclipse cycles, and we've got one of those coming in on March the 8th. We've got a new moon and solar eclipse, so we could be watching for something happening around that time. We like to see these cycle dates and the patterns completing at the same time, because then you have both price and time on your side, and then you have a better chance of better probability of winning. And remember, it's a probability, it's never a certainty. That's what we're trying to do here, is just to match a few of these patterns. So live every day in an attitude of gratitude, and may God bless. Thank you for listening.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.